All right, welcome back everybody. Another real estate market update for the Milwaukee area, this time May 2021. We're already headed into the warmer season. Hopefully the weather will turn soon. The market is, as you know, already very hot. So we're going to take a look at what's going on currently, what's happening with prices, how competitive is the market really, what does that mean for you in terms of buying and selling if you or somebody that you know is currently looking into this. At the end of this video, I would also like to touch on a topic that I have not discussed on this channel very much, but I feel it's time that I have to bring it on the table, and that is the topic of inflation in the context of real estate. So we're going to talk about that a little bit at the end of the video. But let's get started with some numbers and let's see what's going on currently in the Milwaukee market. So single family market in April has improved slightly. We have more inventory than we just had a month ago. Fortunately, we have to say, because we were so dry on inventory. If you have missed last month's video, just to give you a little bit of a context, we used to, like 4 or 5 years ago, when we still had a balanced market, balance between supply and demand, we used to have total inventory of around 13, 14, sometimes 15,000 houses for sale. And last year we were down to less than 5,000. Everybody was screaming and said, oh my God, we have no inventory. Is the market going to seize up? And then earlier this year we were down to like under 3,000. So we're back up. There's a slight improvement. More homes are coming to the market. I actually have a number of listings as well that will go live in the next few weeks, and I know I'm not the only agent, so there's going to be additional inventory in the next few weeks, but we desperately need it. We have from 3,500 to go up to 6, 7, or even 10,000 units available, which is what we had just a few short years ago. We have a long way to go, but at least this is a glimpse of hope here to have some supply. Home sold is down 3% compared to last year's, more or less flat. And the issue is we're really constricted by available homes. So there's a lot more buyers out there that are willing to buy a home, but it's the speed of the market is basically dictated by the speed of supplies becoming available. So as houses are coming on the market, most of them are getting bought up. Most of them, not all of them. So of course this is having an impact on pricing. So prices are up 8.11% for the entire metro area. Specifically for, if you look here, just the Milwaukee County numbers, we are now deep into the $200,000 territory. I remember when I started investing in real estate in Milwaukee, we had $135,000 median sales price for a single family home. Last year we were in the 190s, so now we're at $215,000, which is 13.16% more than it was last year. So trend unchanged, low inventory, very hot bidding wars, and prices are going up. Millennials are the number one home buyer segment, so the largest group. In fact, most of my active clients right now are millennials, at least 75% of them, I would say. On the listing side, I have fortunately some people that are older than millennials, but on the buying side, it's almost exclusive younger people. And as you know, the oldest millennials are now 39 years old, so they're not that young. They're already looking at their 40th birthday coming up. When you look at offers, if a listing is interesting, meaning if it's a very nice house and a good realistic price, then you're typically looking anywhere between 5 and 10 offers. That's kind of normal what we've seen in the last weeks. We have participated on one deal where they actually had 42 offers on one house. At that point, I'm usually telling my clients to not even put an offer in, because that's just nuts. And somebody else can overpay for that house. At 42 offers, it's just getting too competitive. On the other hand, we are still getting houses on the contract where we only have to compete with 1 or 2 other buyers. So knowing what to look for and knowing how to judge a situation, goes a long way. So if a listing is hot and, a good house, interesting price range, let's say around 350, still within reach for the wealthier ones of the first-time home buyers, they go up to about 400 usually. then it's not uncommon for the sales price to be about 10% over asking price. So 10% is kind of the number. We're seeing deals going through for more than 10%, but I would put those in the outlier category. 10% is a more reasonable number. And a lot of buyers are waiving contingencies. So we're seeing the trend continue. Is, what do you do if you're already offering more than asking price? You're looking for different incentives to stand out from the 5 or other 10 guys that are making an offer. So people are waiving contingencies. Home inspection and appraisal are the two most common ones. And there's a whole lot to talk about there, if it's smart or not smart to do that. And it largely depends on the deal and on the house and on your personal situation, if that is a smart move or if that is an absolute no-no. So let's take a look at number of listings, and here is just a quick visual. This is directly from the MLS. You can see inventory is coming up. It got me really worried in February and then in March when we were so low on inventory, under 3,000. Now finally we're creeping up, and I'm recording this on May 6th, so I'm already seeing what's going on early in May, and this trend is going to continue. So hopefully we're going to reach 3,500, maybe 4,000 houses for sale relatively soon. So, that's still a far cry from the, 13, 14, 15,000 we used to have a few years ago, but at least things are starting to head a little bit in the right direction. I think vaccinations have a lot to do with it, because a lot of people have been really, they had plans of doing something, moving, but they didn't do it because they were not vaccinated. And just with the whole uncertainty, they did not make a decision. Now we're actually starting to see some momentum there. Like I said, I've personally a number of listings that are coming up in the next 2 weeks. All right, what does that do to pricing? So no surprise here. We have your sold to list ratio. So that means on average, how much is a house selling for? And it is very unnormal that you see this ratio to go over 100%. You can see that we had that last year in the second half of the year. We were over 100%. So seeing an average that actually is almost at 103%, that is, it just illustrates the situation that we currently have. Here I have some numbers from the NAR, and this is the average number of offers received on the most recent closed sale. So this is about a month delayed in data, because you have to wait from accepted offer and an average a month, 4 to 6 weeks until closing. And on a national average, we had in February 4.1 offers. Again, keep in mind these are national averages, so that if you have 4.1 on an average, that includes all the markets that are not as hot as Milwaukee. Milwaukee is in top 10 hottest markets of the nation in terms of how competitive we are. And this also includes all the offers that are not going competitive. So if you have deals that generate no offer or just one offer, and then you have ones that are generating 8, 10, 20 offers, 42 like we had in that one outlier example. All right, next let's take a look on inventory, what's going on a national level. I think it's always important to have that context of what's going on locally versus what's going on in other states. And what we have here is the change in housing inventory in the last 12 months. So on average, the US has lost 52% of inventory. So Milwaukee and Wisconsin are not the only places in the US that suffer from a housing inventory shortage. This is a national phenomenon. But then let's look at the patterns and let's see what's going on here. What you can see here is that we have these states that are colored in this light red color. They have lost inventory, but not as much as the US average. And then you have these states that are in these dark red colors. Look at Utah here. They're almost 70% down on inventory compared to last year. So of course, this has to do with migration patterns that we're seeing. A lot of people in California are just tired of paying high taxes and also maybe having to smell smoke all summer long because of the wildfires they have seen last summer. A lot of people are moving from California up to Oregon and Washington, or down to Texas, or here into Arizona, Utah, and Idaho. So you see that they are really wiped out on housing inventory, even much more brutal than we are here, because people are moving from here into here. And you also see that here in the Southeast. So that's a very popular destination. People are moving into those areas, so that's where they're really the hardest hit with that inventory reduction or lack of supply that we have seen. Interesting here, Wisconsin, we are down pretty good. So our inventory is down more than the national average. But if you look here in Illinois, they just got away, barely by 0.6%. If you look here, 45% is the cutoff here. So they were Illinois is almost light red. And, as we have, the Chicago exodus is, a real thing. People are trying to move out of Chicago. They're trying to move out of Illinois. And a lot of people who are moving away are moving down here. And some of them are also moving to Wisconsin. So this is a pattern that we are seeing as well. Now, let's take a look on what is getting us or what got us into that inventory shortage. And I have a chart here that if you are a subscriber to my channel, you may have seen this before, but it is so important to understand this. So when you look at what happened with new construction, this is how home builders are producing new homes, what's going on there. So you can see that it started basically in the early 90s, mid 90s, when we were producing more than the long-standing historical average. So this is the historical average, how many homes we produce in a typical year. And we started producing more than on average, and we started going up. And then, of course, we hit the early 2000s, and we had that crazy exuberance with the ninja loans, and that really fired up the market, and home builders went crazy, and they put at the peak out 1.8 million homes. Now, the issue is that, of course, then we had that whole thing crash because of the subprime mortgages, and people lost their houses. Home building crashed. A lot of builders went out of business as well. And they, of course, annual home building went down to, the lowest was about 400,000 a year. So, we cut really back on building new construction because we had such a supply overage. There were too many houses, many of them vacant, not needed, an exuberance in supply and in pricing, of course, everything based on speculation because prices kept going up every year. Now, we were down here, so slowly we're trying to ramp up supply again, but we have still not achieved to produce the long-standing historic average, and we're still carrying that deficit here. So the Wall Street Journal just recently posted an article that we are short as a nation about 4 million homes, and this is because of that underproduction that we had here. The first few years that underproduction didn't really matter because we still had such a supply overhang, so the market had to consume the existing supply. But later on, we came in that situation where we really should have started ramping up production again, and we didn't do that. The home builders were simply just not there anymore. We had lost a lot of them. So in the meantime, we also have seen a population increase, and what you see here, the blue line is the total population of the United States has been going up steadily. And the red line is a very non-sophisticated line that I drew in here. And that basically illustrates new construction. So this is that Z pattern that you see here going up, then cutting steep down, and then coming back up again. So this is new home construction. And I just drew that in here in a red line so you can see what happened. So as we were stepping on the brakes and really cutting down on new home construction, meanwhile, population kept on growing. And the first 5 or 6 years, it didn't matter so much. But eventually, we got to the point where we had a shortage of inventory. And now we're in a situation where we're playing catch up with the inventory. So there's a lot of discussion on how long that's going to take. But what it does, of course, it's driving up prices. And here you can see the change of home equity. So we're headed into a situation where the market is really dividing because it's rewarding home ownership. And if you are already owning a home, you're kind of riding that wave because now you have gained equity. Wisconsin here, $19,000 last year, a little bit below the average. We're always on the conservative side of 26,000 as a national average. And you can also see out west, of course, we had huge increases in home values, which also is driving up home equity. So That was really a windfall for everybody who owned a home. What concerns me here is that it widens the gap even more financially between those people that already have a home and those people that are still renting, because the more time passes and the more this gap is drifting apart, the more difficult it is for somebody to jump from that situation where you're renting into buying a home, because now you're paying even more for the home. And if interest rates keep going up, then that makes it even more difficult to make that jump. If you already own a home, then congratulations, you're already on the train. Yeah, the market keeps appreciating and going up in price, but at least your home is already generating equity for you, because you're the tide rises all boats, right? So you're on that. Now let's take a look what's going on with home price forecasts. So I have here a number of researchers, and I had these numbers here in the January video, and you can see that they were kind of careful with their projections for this year, because we had last year a national increase of around 10%. So some sources say 9.8, some say a little bit over 10. Milwaukee actually smack square in the middle. Milwaukee single family home prices rose on median 10.26% last year. And so, projecting an appreciation this year of 5.3% was very conservative. They have just redone their projections, and we see now on average an outlook for this year of 7.7%, just shy of 8. I'm being a little bit more optimistic here for Milwaukee. Based on everything that I see right now, we are basically going up about 1% a month. So if we're continuing on the current trajectory, that will put us by the end of the year at about plus 12%. So that would be an increase that is even more than we have seen in 2020. But at the moment, everything that I can tell you, everything that I observe here in the market on a daily basis, is that we're gaining equity. Home prices are going up on a faster pace this year, even yet than what we've seen last year. Now, here's another take on the question, are homes getting too expensive? There's a lot of people that are saying this is crazy, this is nuts. And I totally understandably, because they're worried this is going to be a bubble and homes are getting too expensive. And this is a topic that, if you watch this video, chances are you're also watching other YouTube videos, and you see a lot of people talk about, is the market going to crash? It's going to crash this year. It's going to crash next year. It's going to crash. So here's a little different perspective on this. And this chart shows you how long does it take with a median income to buy a median home in each state, and doing that by saving up 10% down payment. So we're measuring home value in US dollar is one way of doing it, but you can also measure home values, for example, in gold, or you can measure it in terms of labor, or how long do I have to save on an average income before I can buy a home. And so you're measuring home values in terms of income. And this is what you see here. So we have a United States average of 2.5% approximately. So 2.5 years is what you need to save up on a median income before you have a 10% down payment to afford a typical median home in your state. Wisconsin is still very low, under 2. We're at 1.97 years. So that makes us one of the cheapest states in the nation in order to buy a house. Yet, we see prices go up relatively fast. And from our perspective, from what we're used to locally with what home prices have been here for the last 10, 20, 30 years, we feel that this is crazy because home prices are going up too fast. But when you look at it this way, and how long does it take anybody to save up for buying a home, Wisconsin is still one of the cheapest states in the country. In fact, if you look at the 100 most expensive metro areas in the US, then Milwaukee is coming back at position number 61. So 2/3 of the metro areas in the US have home prices that are higher than Milwaukee currently is, or the Milwaukee area currently is. And the Milwaukee metro area, by the way, that includes the 4 counties around, so total of 1.6 million people. Now, you can see when you go here out west, California, you have to save up for 17 years. So if you try to move from Milwaukee to California, it's almost guaranteed you're going to be renting because it is so unaffordable. If you don't have a house to sell in California before you buy another house, it's really crazy to get into that market. But there's a lot of states where you are in the 4 months, 5 year, 4 year territory, and a lot of them are in the threes. So almost 4, you have to save up before you can buy a home. So from if you take this yardstick to measure the housing market, then we still have quite a bit of way to go, and our housing is still relatively affordable in that context. So speaking of context, if you're watching YouTube channels, I'm sure you have seen a lot of people that are predicting the housing market to crash either last year or this year or next year. Some of these YouTube channels have hundreds of thousands, maybe millions of subscribers. They are talking about personal finances, investing in Bitcoin, talking about investing in the gold market, etc. Know that my channel is not monetized, and I'm consuming a lot of information and a lot of data. And I have here a lot of my typical data sources. So these are professional research firms that provide data and research for the big banks, for government organizations, for hedge funds, for pension funds that are looking for data around the housing market. So as a lot of them are, you have to pay for, you have to subscribe. So here are some of them that I use. And you will see when you go through my charts, I always have a source. So if I'm quoting a certain source, you always have where the data is from and who generated that data. So I think this is a very important differentiation, and I'm contrasting this with what I'm seeing every day in the real estate market here in Milwaukee. So if you're one of my active clients, you know this because you hear me talk about what I just read yesterday from the Mortgage Banker Association or for Adam Research or what KCM said and about millennials. And I may have asked you if you think this sounds about right and if your friends are agreeing with that as well. So I'm contrasting this information. And I think the point that I'm making here is that I have a lot of clients that are, I would say half of my subscribers here on my channel, it's a small channel, are actually my clients. So I know them personally, I've worked with them personally. Maybe I've bought with them their first house, now we're buying their second house, or maybe we're already on the third. But those are people who know me and I know them. So I have to be very careful what I put out here on my YouTube channel because I know my clients, they know me, and this is my business. This is very different from me to say than somebody who has a monetized YouTube channel with no skin in the game because they will never meet with any one of their audience. That is a huge difference. My audience most of my audience are my clients, and if you're currently not a client, maybe you're considering, you're looking for a real estate agent and you might give me a call someday. On that note, I just posted 2 other videos that are dealing with where are we currently in the market cycle. Where, are we in a bubble? Is the market overheating? Should you buy a home now or should you wait for the market to crash? Because this is a very common question. So I have 2 videos that just recently posted on my channel. One is talking about should you buy now or should you wait another year? And the other one is contrasting the current situation in terms of it feels like a bubble, prices are going up so fast. Is it a bubble? And I'm contrasting this situation or the data that we have currently for the housing market with the situation that we had back in 2008 and the data that we had back then. So if that's something that's on your mind, a lot of people are thinking about this. Is the market overheating? Then take a look at these 2 videos. I go into great details into how was it back then, what's going on right now, and why are we in that situation where we're at. And I cannot predict the future. The future has not yet been written, so I don't know what it's going to be. But what we can do is look at the data and see what's currently going on and say, okay, is there an exuberance or what is driving those prices, and what do we see on the horizon? And everything that I can tell you right now, there is nothing on the horizon that I can see that will change, or that is going to change the direction of the market. I will let you know when I see something that concerns me. We're keeping an eye on forbearance. We're keeping an eye on the eviction moratorium, which, by the way, got toppled yesterday by a judge with national consequences. The judge ruled that, right or wrong, the CDC did not have the authority to make that call. So it's going to be interesting to see how the White House is going to respond on that. All right, let's wrap this up with the summary and an outlook for the summer of 2021. Best I can tell you, and what I see in the data and from personal experience, we are going to have a little bit more inventory as people are getting more comfortable getting vaccinated. But keep in mind, everybody who is putting a home on the market to sell is also going to be a buyer. So in terms of inventory, that is really going to be a wash in the net zero, because we fundamentally don't have enough houses. So just that somebody sells a house and turns around and buys a house didn't really change the equation. It just adds more volume and transactions. But we're definitely seeing a change here, and there's going to be, if you're currently looking, there's going to be more houses on the market in the next weeks, you will see. Price increases are going to continue on the trajectory that we're currently at. So I'm currently seeing home prices go up at least 1% a month, and there is nothing on the horizon that makes me want to think that this could change anytime soon. So we are dead set on that direction. And Milwaukee will remain hyper competitive. So we are one of the top 10 most competitive states in the nation, and we're also one of the most affordable. We have some of the lowest home prices in the US, and I think that's part of the reason why homes are so competitive. It's not necessarily that everybody's trying to move to Milwaukee. We're seeing that as well. I'm getting a lot of relocation clients, but Milwaukee is far away from becoming a relocation destination like Denver, Colorado, or Austin, Texas, for example. But nevertheless, we will stay hyper competitive until inventory changes or until demand slows down. Interest rates are expected to rise slowly, so that is a little bit of a change. The general consensus in the industry was that we're going to see rates approach 3.5% by the end of the year. Now it's a little bit more like 3.2, 3.3, still a little bit higher. Historically, anything below 6% was considered extremely low interest rates. And if you calculate your monthly payment, it doesn't really make that much of a difference if your mortgage is 3.2 or 3.3 or 3.5. But nevertheless, rates are expected to go up a little bit. 3 months ago, we hit the all-time low at about 2.65%. What's changing is that home prices, when you look at Milwaukee, so home prices appreciation was mostly in the lower price segment, so up to $350,000. So most competitive segment was always $200,000, $250,000, $300,000 homes. Perfect for first-time homebuyers, millennials that are buying a home. That's where we have seen the crazy bidding wars. But that's cascading because these sellers are now moving up. Typically they're taking a $200,000 jump, and so they're going from $300,000 to $500,000 or from $400,000 to $600,000. And that is generally a smart move because they're trading out of a extremely competitive market where they're getting a lot of offers, and they're buying into a little less competitive market. And what we're seeing now is that this cascading effect has been happening enough that we now also see the middle price segments and the upper price segments get more competitive with multiple offers, and we're also seeing prices go up there as well. Luxury is still pretty flat. So luxury in my book is in Milwaukee anything that is over $700,000. So that is still, remaining relatively stable. But historically, those are not properties that appreciate usually a whole lot. But we might see some change there in the future. Definitely a good time to trade up. So if you're thinking what you should be doing now, should I put my $300,000 house on the market and buy one that's a little bit bigger? With the low interest rates and the high demand for that house that you have, this is definitely a play you can consider. And finally, as always, I love hearing from you guys. So if you have any questions or comments, please put them in the comment section below. I respond personally and usually try to do that within 24 hours. If you want to, you can also reach out on my cell phone. Here's my cell phone number. You can call me, text me, or send me an email, whatever you prefer. A lot of people are reaching out to me, which is always exciting after they've seen one of my videos. Doesn't matter if you're here locally in the greater Milwaukee area or if you're out of state. I love answering questions. That's why I'm making these videos. That's all I had for you today, and I'll see you next week.